Good morning, everybody. Welcome to the Flow Show, Monday, the 11th of August. And a fairly moderate week expected. Got a few big events to get over. US CPI, this summit with Trump and Putin, RBA, and a few other bits and bobs, which we'll get into shortly. Morning, Kay. Good weekend.
Ryan, good morning. Good morning, everybody. Yeah, pretty good weekend. So one of our Forex Analytics mates as well. Very, very nice weather, nice terrace, nice Saturday afternoon. So yeah, the weekend was good, mate. I'm ready to rock and roll again.
Yep, good. Right, let's get going. I'm going to start over in China, the PBOC. They've winded up their reverse repo operations. They run a 7-day repo program pretty much every day. They've widened that up to what's called an outright reverse repo op, up to 700 billion yuan. That started as of the 8th of August. That will run pretty much once a month as opposed to the daily 7-day repo operations. So that's just a bit more liquidity being provided into China's finances over there, just all part of their getting stuff moving or trying to get stuff moving. So we'll keep an eye on that. We did get a bit of data out as well. Let's see if I've got it on this one. Yep, CPI and PPI. PPI coming in much worse year on year. CPI year on year coming in flat, although the month-on-month number did beat by a pip. But as you can see there, still very, very low price pressures going on in China. This is July data, and that's also not really being affected by any of this trade stuff that's going on, but maybe that will start being impacted if we see the tariff stuff filtering through, if they don't keep kicking the can every 90 days. Over in Japan, Shiba continues to vow to stay on, even after this plenary meeting thing last week where he said he was going to continue on despite people within the two houses and his party calling for him to quit. So he's being a bit stubborn and he's going to stay on. They're still discussing when or if they may have a leadership election. So it might in part come out of his hands, but there's a lot of procedural hoops, shall we say, to jump through to get that election going. But that's still ongoing, but he's talking tough at the moment. Bank of England's Peel was waffling after the BOE last week. Says there was a clear decision made to cut rates. Well, it was clear the second time around after they fucked it up the first time around. You define clear, I don't know. He said disinflation shows an ongoing progress. Again, that's despite inflation going up, continuing to go up. He says inflation is being driven by one-off effects. As I'm fond of pointing out with the UK, inflation is always a far stickier beast than can be seen elsewhere. So those one-off effects tend to last quite some time. But he did acknowledge he sees a risk of a spillover into more persistent inflation, but says a weaker labour market is acting as an offsetting factor. A bit of data we got last week. It was Canada top of the pile. We had their jobs report, a bit of a messy one. Jobs, employment change falling just under 41,000, was expected to post a gain of 15.3 thousand. So some of the stats Ken's probably getting fired this week. The revolving door was in action as well. Full-time employment doing most of that damage, falling 41,000. Part-time employment turning around the gain last month to only post a 10.3k gain. Participation rate came down. The unemployment rate stayed unchanged, was expected to tick up. So that was probably the only bright spot there. But again, that participation rate coming down probably is what kept it there. Might have gone up otherwise. Overall, I mean, this data, you can look at it. This data has been running pretty okay over the last few months. Not too many wobbles. So at least one can say that we've had more up movements than we've had down movements. If you want to try and take something positive from it, K, not that CAD did an awful lot last week on the back of the data, but do we panic about this data as much as everyone's panicking about the NFP?
If it continues, but as you show there, I mean, it does change quite a bit from month to month, and I'm not sure how much seasonals are in there, and especially those revolving doors between part and full time. We see those basically change virtually every month from one side to another, right? If you look at that. It's a bit of a difficult read, or it's getting to be a bit of a difficult read for continuity. So yeah, I think the market reacted reacted straight away, but then everything died its own death into the weekend. Yeah, I'm a bit not confused, but just bearing in mind that those data jump around quite a bit. So next month maybe we may see another picture again.
Yeah. And the market did pretty much take it in its stride anyway. Prior to the meeting, there was a 33% probability they'd cut at their next meeting in September. That's up at 37% currently, so not much of a change. But the market is pricing in one full cut by year end at the moment. But otherwise, little changed there on the rates. We've had Fed's Muslim out as well last week, saying the economic activity appears stable, it's not now increasing or decreasing. He says that bankers report that funding pressures have diminished and credit quality is good. It says companies continue to report a shortage of skilled labour. Firms remain cautious on capital spending and hiring. Companies are not yet resorting to layoffs to reduce costs, and companies that are most dependent on imports are passing along costs. Those closer to consumers, though, are less likely to raise prices so far. It's likely that most of the impact on tariffs on inflation will fade, but there's a reasonable probability that there may be some inflation persistence. Quite interesting comments there, Kay, because we're still hearing that firms aren't resorting to big layoffs. Now, obviously, don't know what every firm's doing. But again, it just goes a bit of counter against the NFP data, perhaps. Well, the revised data anyway, perhaps. And that it could still be just a bit of a one-off in that data.
It could be. And we also hear perhaps only from the biggest companies, but if we put one and one together, if we're seeing a lot of companies laying off people, right? So I think we should still remain a bit cautious with all those comments, because we have seen a revision in those data. Well, I mean, now everybody is going to doubt every data point, of course, but I still think we've seen enough layoffs in companies, and let's not forget. I mean, layoffs is 180 degrees from hiring, right? I mean, keep it stable with the population slow, maybe now growth and being. Of course, we need to take into account migration, etc., with the Trump administration. But layoff still means that you destroy jobs and not even stay put, right? So I don't know. Maybe seen different data that we have not had access yet to, or other companies hiring, in fact, or living on hopium. And if America can bring it back home, they are going to have to hire later. I don't know where he got his set of data from, but from where I sit, I haven't seen like extremely positive stuff.
Yeah, absolutely. So who knows what might be going on? Right, this gold tariff stuff that was got the market hopping around last week. The White House is to apparently clarify misinformation on gold tariffs, and the order is to be posted in the near future. I did a quick check this morning. I couldn't see if they've posted anything, so we're still on tenterhooks with that one. But some sort of clarification is coming over that. Besant, he sees trade talks largely finished by the end of October, which is a bit of a drag on from all these great deals that were going to happen soon and in the pipeline. And well, if you're talking deals like India that were going to be one of the first to be announced, now they might be one of the last to be announced, but that's the way it's going. So he sees end of October. It just tells the market that these things are still dragging on. We've already had a 90-day can kick on the China stuff. So
Yeah.
the rest aren't signed, sealed, and delivered yet. So
actually, that would bring us further than end of October if they got a 90 days on top of it's tomorrow, right? The deadline with China, or the supposed deadline with China, right? Add another 90 days on top of it, we are in November.
Yeah, I don't know what the I've lost count of what deadline days we've got. But yeah, so yeah, we know China's a different kettle of fish, perhaps, but yeah, who knows? We've had more deadlines than anything in this last few months. Anyway, Besant also says that tariffs should melt if countries rebalance their trade with the US. Soybeans are back on the menu. Trump says that they are key to reducing China's trade deficit with the US. Hopes China will quickly quadruple soybean orders. And that China is concerned about soybean shortages. This is a bit deja vu to Trump 1.0, which soybeans was one of the big things that he got. He got a trade deal on that China never adhered to anyway. So maybe Kay is hoping for better luck this time around.
Yeah, it looks like it. And he ended by saying thanks, President Xi. But he thanks people. So maybe that's another one where I think it's just a matter of come on, Xi, pick up that phone, mate. Again, because Xi is quite stubborn. Let's to put it mildly. He's just not picking up the proverbial phone, and I think it's just another way. Of course, it would reduce the imbalances, and let's face it, with China compared to other countries, he's not going to be able to play the game. If you don't play nicely, I slap 100% tariffs on your neck. It's. I don't think he can afford, or at least that is not the way things are going right now with China. So he's really trying to push on one side, but remaining a bit gentle on the other side because it's just such a big thing. Uh, was it Besant? Yeah, Besant had that interview where he said China was producing below cost as well. That should change. So it's like a bit of a pushing and pulling, but for once, Trump wants to play the nice cop.
Yeah, we shall see. That kicks off as well. All going to come to a head, no doubt. Right, over to the Fed. And apparently we might have the return of Bully Bullard because he's now one of the contenders for Fed chair, according to reports in the Wall Street Journal, as is a Mr. Mark Summerlin, who was a former Bush advisor. Apparently now there's a list of 10 people under consideration, including who we already know, Waller, the 2Ks, and the others. So Bully Bullard is now on his way back. Mr. Seesaw, we should perhaps call him K, because he used to be all over the shop. One minute he was a bull, then he was a hawk.
Yeah.
One minute he was a inflationista, and next minute he was a disinflationista.
Yeah, exactly. But the interesting thing is that Besson also in his interview with Nikkei, he did drop the sentence that he says we should really take somebody who has already a lot of experience in the field. And then you look back at other candidates. All of a sudden, you have to, if Bullet is in the list, you have to push him up a few notches because he has been there. But as you say, we don't really know which side he's going to be on from one month to another. So yeah, we're still a bit away. May it seems to gets more and more to the point that they are not going to fire Powell early, or at least not try. I think there's just it would just take too long. You remember we spoke about that, and it will have to come before juries. It will have to come before even go as far as the big court there in the United States. So it could just take too long to get him out of the door. So now they have to look at that list. And again, Besant, another he's really going to be the rainmaker or the kingmaker now over there, because he's doing everything. He's doing US's public relations, and now he's going to be the one who is going to choose the next Fed chair as well. So yeah, we should really listen to what he has to say more. Well, if not already, even more and more, because he seems to be the decider going forward. But yeah, as he said, I mean, if it's really somebody who, with a lot of experience, Waller okay, but then there are questions to be asked around Hassett and Walsh, perhaps.
Yeah, and there's still two positions to fill because we've only got the other guy in temporarily. So
Mira.
there's still two positions to fill, unless he stays on, of course, which might be a possibility. I don't know how it's all going to work, but yeah, and we've got to remember, and we've been saying this pretty much since this thing kicked off, is that the composition of the market's view of the Fed will change once we know who the prospective Fed chair is, because Powell will be like an option expiring. What he says will have less and less impact because everyone will want to know what the new guy says. Now, if the new guy keeps his mouth shut until Powell's gone, then that's fine and dandy. But if we end up with a bit of a battle going on where we get an FOMC decision and the new guy comes out commenting about it, then it could create some waves in markets. We need to keep an eye on that. We said probably September, October would know who it's going to be, and it's looking like it might come even sooner than that. So just be ready for when we get the new guy, because the market's going to be delving deep. We're all going to be Googling him, Kay, or her even.
Yeah, could be. Yeah, but I don't really see Miram staying. Well, I just find if you listen to Besant, Miram is not somebody who should stay at the Fed at some stage. So he's just going to fill the seat, the Kugler seat, until what is it, January, February, and then probably make a lot of noise because he's been instructed to do so. And yes, then as you say, there's probably two seats to fill there.
Yeah.
Oh, and I think if we look further, by the end of 2026, are there not a few other mandates ending over there? I'm not overly sure. I need to look it up again, but I thought 2026 was a bit of a musical chair at the Fed, if I recall well.
Yeah, I think there's another couple of, I think is Daily one of them. I can't remember. I'll have to look it up.
I don't remember either.
Yeah, we'll have to look. Plenty of time for that. Right, let's move on to other things. So last week we had all this potential Russia-US stuff going on. In the meantime, Putin had a phone call with India's Modi, which they discussed. US envoy Witkoff's visit to Moscow. They're all palling up after things have soured between India and the US. One of the plans, or one of the routes to peace that Putin wants anyway, and apparently the US are in on this as well to some extent. This was reported by Bloomberg last week, was that Russia wants to have a Ukraine deal that cements their gains. So that's just sending a bit of a potential boundary there. Ukraine President Zelensky said we should all support US constructive efforts to reach a ceasefire in Ukraine. And after all that, then we got this pretty much confirmation that we've got a summit this Thursday in Alaska between Putin and Trump. The reason it's in Alaska because it's only a few miles from Russia, and Mr. Putin still has an international arrest warrant hanging over his head. So if he wants to bug out. He hasn't got too far to hop across the water. I think it's only, is it 30 miles, 36 miles or something between Russia and Alaska, Kay? It's some silly short distance, isn't it?
Yeah, no, it's extremely short, but Alaska is not far from a lot of from a lot of countries, right? And but yes, it is definitely one of the reasons why. Uh, the, there's still a bit of noise going around that meeting, right? Because now he's not 100% sure that Zelensky will be there. Tusk just came out saying that the US has pledged to consult European partners before meeting with Putin, but there is extreme unclarity about what consulting means in this case as well. So it's yeah, I think there's still going to be a lot of noise before that meeting happens.
Yeah, this is one of these moments where Trump's organising something with Russia, and obviously everyone else will want to have a hand in those discussions, particularly Europe, and they don't
Yeah,
like being missed out or passed over. No
mm,
doubt we'll get Macron shouting from the rooftops at some point. He never likes
yeah.
being missed out.
But
But anyway, yeah, go on.
yeah, they might as well, Ryan. I mean, if you look at what what Trump is proposing, it's really give it all to Russia and then we stop fighting.
Yeah, which well, but then to be fair, they have said that both sides are going to have to give up some ground.
Oh yeah,
But it's obviously that will stick in the craw for the Ukraine because it's their ground they'll have to give up.
yeah. They have to give up a lot if that plan comes
Yeah,
together.
exactly. So we'll see where that goes. It's going to be a big risk event. Um, I'm dubious we'll get anything major from it, but we hope that we do. Any end to hostilities will be good news. Right, coming into what we got this week coming up. We've got, oh, let me give you those. So, data wise, not a lot out today, particularly from the US. We've got the RBA tomorrow. Now, this is a bit interesting because we got a little bit of surprise last time. The RBA caught the market on the hop by not cutting rates as expected, keeping them on hold. Now, a lot of this has been down to the way that things are set up at the RBA now, because they have a voting board, and there's only two RBA officials on that board. The others are made up of a Treasury official and six external members. So it's all coming down to the votes. There's no sort of guiding hand from RBA officials, which puts them in a bit of a sticky point because if the two RBA officials say vote for a cut and all the rest vote to hold, then that decision carries, and then the governor's Bullock has got to go up ahead of the press and explain why their thinking is right and the other members are wrong. So anyway, it's the other thing is I've looked into this today. All the people associated on the board apparently only get one public appearance a year, so we don't get that constant stream of views and opinions that helps guide monetary policy, as it's called, forward guidance. So this meeting, the RBA are expected to cut 25 pips. But Kay, could you rule them out, stand on hold again?
Um, I think that compared to what we had last time and then before, where I thought it may be the case that they would go for a cut. Nothing really has changed, so I would go with consensus and they cut this time. Now, the question is, will it have an impact on the Aussie? I would argue not too much of an impact because it should be just as expected and a bit of a catch up on what should potentially have happened last time. So I'm not sure whether we see a big impact on the Aussie. Overall, I still have that feeling the Aussie could do okay just because that they were a bit spared by the US on tariffs, etc. So I'm going to say Oh, if they cut, it's probably going to push the market to needing to reprice again and whatever, and push the Aussie up. But if they do cut and as expected, then Bullock is not a dove. So if they cut, it's going to be what I would expect, a neutral kind of cut, not a very dovish cut. That would be the surprise one, a dovish cut. If Bullock all of a sudden goes all dovish on us, then the market will perhaps yeah be a that would be a bit of a surprise as well to the dovish side. But I'm going to go for consensus and say like okay, neutral kind of cut.
Yeah, but it's a very what a
Mm,
situation for them to be in, and
yeah.
particularly the RBA officials. They don't even tell us who's voted which way.
Mm,
Um, so it could be a case that these RBA officials want policy a certain way, and all these other bods take the casting
yeah.
vote and take it the other way.
I mm. I don't know who are the let's say unofficial voters. Are those like people from the business side of things
Yeah,
or
economists and all
oh,
that.
economists?
Other.
All right, okay.
Yeah,
If they
that's
are
the other.
mainly economists, I think they may side. But it is true. It's a bit of a strange one. Bit of a yeah, bit of a strange
Setup.
system over
Yeah.
there. Now let's give them some credit. It may level out a bit. Okay, you level out a bit. I mean, if you have economists from both sides or whatever, it does make the vote perhaps a little more just than when it would be all RBA bots and Bullock sitting there and trying to get everybody over to her side, which is a bit what is now told that maybe Powell and even Lagarde are sometimes pushing to get people on board with their view. It may make things a bit more just, but I don't really know who are those voters. And as you say, if they can't express their reasons and reasoning, yeah, it all leaves it back over to Bullock and her deputy governor, basically.
Yeah. Long story short, this stuff is going to increase volatility around RBA meetings due to that lack of clarity, which is no bad thing, in my opinion. Right. Anyway, back to what's going on tomorrow. We also get UK jobs, which is going to be a first test of the Bank of England last week with their undovish cut. If we get a stinker out of these numbers, that's going to again put a bit of pressure on the BOE to continue with this cut stance. We get that tomorrow. ONS data still up in the air though, so we'll take all those numbers with a pinch of salt, but the market will react to what we're given anyway. We get the German zoo survey. We'll see if sentiment has improved over there. And then the big number tomorrow is US CPI. And again, after the FOMC, we get to see whether they're going to wobble on the jobs market or whether CPI is going to hit them on the other side of the mandate and continue going up. CPI has been pretty hot for the last few months. We're sailing above 3% again and looking to go higher in this report as well. So the surprise will be is if we see softer CPI tomorrow, but we can talk about that in more detail. Wednesday, we get a PPI data from Japan, and then we get a load of final CPI numbers this week as well from Europe and elsewhere. But otherwise, a pretty quiet Wednesday. Thursday, we've got the Aussie jobs report as well. So that again will play into what we've just heard from the RBA. We get GDP data, industrial production and trade data from the UK. This is the first Q2 numbers for GDP, and the monthlies for trade and industrial production. Again, putting the message from the Bank of England to the test. Then we get, as I said, some further CPI data, GDP data from Europe, and then PPI later on in the US, a follow up to that CPI data. And so it's not Thursday, it's Friday. We get all this trade summit just before the weekend. That'll be happy days. Get a bit more Chinese data in the morning. US retail sales And then we get the first new month's manufacturing data coming in from the Empire State Manufacturing. Then we get industrial production, business inventories, and the flash Michigan number for the new month. So a bit of a busy Friday to end things. Kate, any thing there you're paying particular attention to?
Tomorrow, pretty big day for hang on. Yeah, tomorrow, pretty big day for the cable. Jobs report in the UK and then followed by the US CPI. That's going to be a bit of a driver for the pound, and that should be on the radar, I'd say. And then, yeah, I mean, okay, you got the UK GDP then, but you can watch it everything. But then on Friday, it could be a strange one because if they meet in Alaska, Alaska is running on what is it running on time? The US or so time zone? I'm not 100% sure, but it may be that we only get the headlines kind of towards or even after the close, don't we?
Yeah, that's a good.
Which would open a big box for the weekend and post weekend. Otherwise, if we get the headlines around still during the day, it's probably going to be it's anyway going to be a pretty hot Friday, whether we get the lines or not. The market will likely want to square up positions, maybe sell risk in case it doesn't work, and yeah, could be a bit of a funky Friday coming.
Yeah, could be. Yeah, it might be. Yeah, I think it might be pretty late in the day.
I'd assume so.
That thing in Alaska, so it could be well after. It could be after the UK shut.
Yeah.
Depending, well, I don't know how many time zones Alaska's got, but they're currently 4 hours behind New York. So that's
I think
8 hours. I think they're eight
could
hours
really
behind
come
us.
after. It could come after the close, huh?
Yeah, well, that'd be good fun for the weekend.
Oh my God, yeah. Maybe I'll take next Monday off.
Well, I've already got Friday off, so you can't have that one. Oh, anyway, right. So that's our week of data coming up. So a couple of big days coming. Right, let's have a look. Who was asking about yields? Arnis. What's our take on global bond yields and therefore where the yen is moving towards? Well, global bond yields, they're all pretty much moving in tandem of late. They're all sort of working their way around, going up or down. What I think is probably the underlying current, shall we say, in bond markets is particularly for Europe, UK, US. We know that there's been a bit of a crisis of confidence, shall we say, in the US, and obviously tax bills as well, how they're going to pay for it. That feeds through into bond yields and what investors demand for yield if they're going to be lending. We're seeing a bit of the same in Europe because of all this increased defence spending, Germany ramping up borrowing as well. So that's obviously, again, it brings the debt issues and debt piles into consideration. UK as well, fiscal worries there. So that gets investors again demanding a high premium. So you get this within this underlying theme, shall we say. One of the underlying things in bond markets is an increase in debt burdens and debt issuance going on. And then you've got other things obviously floating around underneath it. For the yen, it's really, you've got to look at what's happening in Japanese yields and US yields. The yen isn't really going to move on what gilts are doing, even so much on what European bonds are doing. So it's really what US yields are doing. The main reason being is because Japan's a big holder of US debt. And then on the Japanese side, you've got what's obviously going on with the economy and the Bank of Japan. So when things are quiet, you keep an eye on US 10s and you find that dollar yen largely respects what's happening in those yields during the or outside of the Asia session. Okay, when it's the Asia session, it's going to be more in tune with what's going on with Japanese yields, Arnis. So by and large, sometimes the correlation breaks down. Sometimes it's pretty strong. Recently, when it's quiet, it's been pretty strong. So if you want to know what's happening with the yen intraday, then you keep an eye on US 10s. Kay, got anything to add on that about yields and whatnot to do with the yen?
I know it's a pretty good thing, yeah. And then listen to any variations that may still happen, maybe in the trade deal. Although it does seem that since we haven't heard anything otherwise over the weekend, it may be that the Japanese and the US are starting to be aligned on it. But those things can change the Japanese JGB market as well. So yeah, but really, as you said, I mean, it's because it has not really been, although from afar maybe, but it hasn't been like your best risk play of late, because yen has been living its own life as well. So yeah, I think bond markets and for the yen still pretty much works. And if nothing else happening, or if nothing happens in the bond market, then you take a second look at risk. It's still a worse trade deal. If everything is like it's better for the auto, but it's worse for all the rest. And don't forget that Japan seemingly has pledged to buy stuff and then invest in the US for over $1 trillion worth, which is a lot. Which is also one of the reasons why I can't stay really positive yen right now for longer than a couple of sessions if we get some corrections also. But yeah, and they will have to get the money somewhere. So that's I think the underlying, let's say, what's zooming under the surface still.
Yeah, absolutely. Right, we might as well look at dollar yen. Not really doing an awful lot at the moment. Had a pretty quiet week last week, about 130 odd pip range, which makes a change. That could be a bit of an effect of summer markets coming in, because we've obviously come through a few events. The key for me, just looking at the price action, is that we are willing to go under that 147, but we're not willing to stand there for too long. So if we do get a proper hold under there, then potentially we're going to be heading lower if we can take out those prior lows down towards the 60s, 70s. So we've had 3 goes pretty much of getting under there. A fourth one might be the one that actually does the damage. But in the meanwhile, upside 148 is really the level we've been looking at previously. Had a couple of goes or a few goes at trying to get up there, and we haven't managed to do it. So that's your main level. So you've got a bit of a range between there. Really take your next direction from if we're moving outside of those areas, 146, 60, 148 there. But otherwise, I've not really got a feeling for this one anymore, or haven't at the moment, Kay. Is this going to be is the yen going to be a big risk pair for Friday?
For Friday, that's a good question actually. US data matter. Japanese data, well, we don't have many of them, but Japanese data are still up and down. It can't really get a real grip of them right now, because one month show slightly different than others. It, is it going to be a mover? It's likely going to be a mover, because you still have those somewhere response to risk, yeah. Because imagine that we get something really bad, or I mean, nobody agrees on anything. Russia, US, Ukraine, whatever. I could imagine maybe Euro to drop a big figure or so, and or two, and that would impact dollar yen then as well. But I would argue that it is kind of a little bit living its own life right now. So I think there would be, for instance, if you would make a comparison in risk and direct implications, I think the US China deal or failure may have a bigger impact on the yen, for instance.
Yeah, I think so. So can you? I mean, can you see if we get some sort of peace agreement, even a partial one like this aerial
Yeah,
ceasefire, is that going to be enough to see the yen weakening again
yeah, I
as we
think
watch
so.
out
I
some of
think
that risk?
euro yen and dollar yen will both be beat.
Yeah. So again, the market might not be open, or might be in the last
Yeah, exactly.
knockings of being
You
open.
may walk in, assuming that we trade here, going into Friday. Let's say euro yen, for instance. You get some kind of a deal which Ukraine and can live with, or on the big lines, euro yen may open at 173 and a half instead of 172. That's and then what do you do? Are you chasing it, or um, yeah, it could be could really mean that maybe too late. Maybe I'm going to do just like an option on something, and because the inverse is true as well. You get something really bad happening also, or who knows, and euro dollar drops 1% or so, and euro yen is trading 170, and that will be the big driver. And dollar yen may also not be very big if the US fails to broker a deal. So yeah, could have like could have an impact on either side in the end, but it should be a mover. And the other one that should be a mover as well, because we have seen that one trade a little bit closer to risk is Swiss, of course.
Yeah, yeah. I knew you were going to say Swiss, so I thought
Yeah, yeah, well, yeah, because it's been trading closer with risk than the yen of late. We have seen those changes in whether it be really small or not, but it was a change. Central banks have included some more Swiss in their reserves, and I think that has something to do with the I'm not really confident in how the whole risk scenario is as well, and so I'd say that risk has been a closer follower. Swiss, sorry, has been a closer follower of risk than the yen, and we're seeing like a gradual move higher in the Swiss. So makes me think that perhaps the central banks are done, and then we are back on the one, the risk train, but two, the problems that Switzerland has now with the US, having been slapped up a much bigger tariffs than peers, and also their pharma sector is still at risk as well. So there's a lot of factors now that bring Swiss also in the frame. And yeah, but you know what? For the Russian thing, yeah, and I think both could be movers. But perhaps just for that one because it has more volatility naturally. Yen will move. Whatever happens on that subject.
yeah, and we're up against a big level here in Euro Swiss. This
Mm,
94.30s, 40s.
yeah.
We've had plenty of action up around this area. Been very solid support since April. Sorry, solid
Resistance.
resistance since April, and
Mm.
going back. Um, you'll comment on that in more detail, I'm sure. Right, just one pair I want to look at before I knock it on to Kay, and I want to make a bit of a point here. If you're trading, if you're inexperienced, okay, you need to look at Dolomex, okay? And the reason you need to look at Dolomex is because this is one of those learning opportunities where you can get experience of what happens at big levels, okay? Everyone's got big levels and whatever. Sometimes you have a level that is absolutely monstrous, okay? And this 1850 is it, okay? An absolute monster of a level, okay? When we were sailing up here and looking at topping out, whatever, there was only one other big level on my line, on my chart, and that was 1850 down here. Now, everyone wants to trade a big level like that when you're sitting up here or you're sitting up here and you're miles away from it. Everyone wants to trade it. Now, what happens is when you get to a level like this, you go from being up here and going, yeah, I'm going to trade 1850 because it's a big level. And then you get into the nitty gritty where you're watching this day to day. It becomes your short term picture. And now you're getting all this action. What's going to happen? Is it going to hold? Is it going to break? If this bounces from here, goes back up to 20, 20 and a half or whatever, in 6 months' time, everyone will go, oh, 1850 was a solid level. But it's what you do with it now that matters. This is where you are trading it, whether you think it's going to break, hold, or whatever. One number, okay, can define the next 3,000-4,000 pips in either direction. Okay. This is why it's important. Even if you're not trading Dolomex, never trade Dolomex, have no interest in trading Dolomex. You need to be watching the price action and how these types of levels play out, because how it plays out here is how every big level potentially will play out. Okay. And you apply your learning from this to any other asset, any other pair, any other big level that you come to. But as I say, it's a switching mentality between watching something that might happen in 6 months' time to watching it as it's happening in the moment. So what's happening in the moment? We're holding this level. We're holding this level, but the bounces are pretty weak. We had one half test down here. We bounced, didn't bounce far, came back, tested the level. We had a bit of a bigger bounce, but that ran out pretty quickly and we're back down here. So what happens is its level is still in the balance. Now, from my perspective, I'm still short from way up top. I was looking to close out that position potentially at 1850. Now, because of all this price action that's been happening over the last month, I'm starting to change that view because we're not bouncing. It's getting my alarm bells ringing that we might get a break. Now, if we're going to get a break, the more times we test and hold down here, the bigger that break may be when it happens. And so I'm less inclined to get rid of my short. I'm now more inclined to perhaps look at adding to my short if we break. I'm short-term long, trading against the level because it's a big fucking level and I want to trade against it. But again, as time goes on, as the price action develops, it's not looking particularly strong. I may cut down my longs. I may flip my stops to shorts on a reverse instead of just getting stopped out and leaving it at that. So my view changes as the price action changes. I'm not changing my plan, okay, because I'm already in my plan. I'm now managing my trade. I'm looking at what the price action is doing. I'm not going to stay long because it's just a big, massive level. I need to see what happens intraday and whether I'm valid in keeping along or whether I need to think about it. So, as I say, whether you're trading this, whether you never looked at this in your life, have it on your chart, watch it, watch what goes on, because then you can apply that to any other big level, any other asset that you do trade. Okay, so this is the experience. Everyone goes, me, Kay, Blake, we've all got experience. This is how we get experience, by watching this shit and learning from it. Okay, because then you build up that experience and then you can move it on to your own trading. Kay, what's your thoughts on this one? It's still in the balance.
Yeah, very much so. Very, very, very much so. And you know what? Even if Mexico is not suffering as much as other countries, whatever, it's still not decided either what's really going to happen between the US and Mexico. And I think that's what's holding the people back of really putting more money into Mexico, because the thing is, you've got the trading side of the Dolomex and the big level, obviously 1850. We've been talking about that since we started to. We've been looking at that, and I remember even already a few years back saying that, oh, if we start to come back down, 1850 is going to be a gigantically fat target, and it has showed up so many times in the past as well. So it's a really very, very important level. And yeah, so but imagine that the market says like, okay, or if we get some news that it's all not going to be too bad. It's a question of, will the market put money back into Mexico, or more money back into Mexico? We know that the specs and the carry traders are already back in it. Otherwise, we wouldn't be sitting where we sit here. But it's really investors, etc., who are going to be the clinchers, whether it breaks or not. I must say that for the time being, rebounds, if you look at the more longer term where you are there, rebounds are not spectacular, right? And gets sold into again. So for as long as we are there below that what is it? That red line there that you have, well, it's
19.
19 basically.
Yeah.
19. For as long as we don't start to trade well above 19 again, and we could still say that medium term, not in the short term, right? Medium term, that the bounces are still relatively shallow. That's kind of how I look at it. And the less you really keep those bounces, the more the chances increase that sooner or later we are going for a ride below 1850. But yeah, it's absolutely at a very, very, very important level.
Yeah. Cool. Right, I'm begging over to you, mate. No time's
Yeah,
ticking
I'm
on.
looking at the time. We are already running over Ryan. Um, ch- you know what? I mean, just because we have those UK jobs tomorrow, I'm going to look at the cable. What is it? Ernest asked about Swiss yen. I'm not a huge fan really of trading a lot of Swiss yen because um, in my personal view, they do move or they should be moving somewhere in similar directions. But we've seen this really, really, really big move higher. And I'm going to tell you something, Arnis. The market doesn't stop trying being short Swiss yen. The only thing I hear ever, oh, Swiss yen has found the top. Oh, Swiss yen has found the top, and then it should come down. And then as soon as it comes down a bit, you see it was a top. And then what happens afterwards? We just continue to grind higher. Now, can we get back to 180? Yes, but look, is your yen and actually you look at Swiss weakness, okay? And I'm long Euro Swiss, okay? I'm long Euro Swiss because I think Swiss should be weaker, but I'm not short Swiss yen because I don't think yen has too much to go for itself to justify a position for me short Swiss yen right now. Now you can trade the technicals. Some people say double top broken here, but if you look at just that one, we've already done the target. So really, I'm not going to spend more time on that. I just want to tell you this has been happening over the past 5 years. So short Swiss yen. I wish everybody good luck. It's not something that I'm even looking at right now. Um, and Ali, your long dollar Swiss, yes. But as I said already so many times, if you're looking at being short Swiss, it depends then on your view on the dollar. If you think the dollar is going to do well, I mean, dollar Swiss is justified. We are trying to move gradually higher in euro Swiss, so that should be okay. Euro sterling, I think the support is around 86.30. But we'll show that perhaps tomorrow or so because we're really running out of time. Cable, this is going to be an important one, and as I said, tomorrow especially, jobs report in the UK and US CPI. Okay, this is like really, really, really short term support coming in around 134.40, but we are really a bit too close for comfort. I think we are going to have a bit of cleaning of the books into that jobs report in the CPI tomorrow. So there is a potential if the dollar doesn't recover more that we are going to have a look at 134.90, but that should be it for the day. I'm rather thinking that perhaps there is, because I'm looking at the dollar, and the dollar is not offered right now to start the week. And of course, I may be wrong, but I'm rather looking at the market maybe after having bought it for a decent few big figures now. Maybe there is a bit of a chance that we are going back to 134.20, but look, it stopped right there. So there again, I wouldn't. I really think that we are not in today for breaking the broader, but we could be a bit in a bit of a yo-yo here. 134.20, 134.90. I would not even be surprised if we see both ends, because it's sterling as well. It tends to move a little bit. But keep those levels in mind also for tomorrow. 134.20, then your big zone 133.65.75, 134.90, and then we're looking above here. This is an interesting one, 134.35.40. So those are levels that you should make a note of going into tomorrow's jobs report, and potentially as well the US CPI. And with that, Ryan, back over to you, man.
Thank you very much, mate. Good stuff as always. And long show for a Monday. I don't like long shows on a Monday, but we've got you up and running for the week anyway. We'll have a 5-minute show tomorrow. Just joking. Right, have a great day, everybody. Have a great week, and we'll see you all later.